Cashflow Diary Podcast, episode 477.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, ladies and gentlemen, welcome to another episode of the Cashflow Diary Podcast. I'm your host, Jay Massey, and I'm glad that you are here today because we are going to talk about change. You're like, what do you mean, Jay? I mean, change. Everything constantly changes. In fact, change is the only thing that's constant. I know, bad. Here's my point. You and I are used to things happening a certain way when it comes to how we do our real estate transactions. Whether it's, you're wholesaling, flipping, whether you're holding them long term, or whether you're like me now and practicing the short term rental thing, either way it goes, you're used to how to buy them, you're used to how to sell them, and you're used to how to finance them. But as the world continues to change, that change eventually makes its way into the real estate world. And that's exactly what we're going to talk about. Because many of you're familiar with crowdfunding platforms for real estate. But what you may not be familiar with is something called the blockchain and how it may be actually affecting or beginning to affect your real estate, the way you think about it and how we interact with it. Now, I have with me today an individual who's going to help us learn a significant amount about these things. I have with me Matthew Sullivan. He is the CEO and founder of QuantmRE, a cryptocurrency startup that supports homeowners by helping them sell a fraction of the equity in their home without taking on more debt. Now, see, just that phrase alone, I know I've already got your attention. But understand, Matthew comes to us with a proven track record in real estate because he is the co-founder of the $50 million Secured Real Estate Income Strategies Fund and as a founder and president of CrowdVenture.com, a real estate crowdfunding company. That's code for he knows a lot about what he's going to share. And more importantly, he's going to help you and I learn because you've heard that this blockchain thing is revolutionary and it's going to change a lot of different things. Well, now we're going to find out why. And it's all up to Matthew to educate us. And I know that he's up to the challenge. So help me welcome Matthew Sullivan. Matthew, how you doing?
Jay, thank you for having me on your show. I'm quaking in my boots, frankly, at the prospect of
You're okay with if you can work with the SEC, you can work under this pressure. This is not that bad. So, this being the first time that you're here, though, I do have to ask you the same question I tend to ask everybody else. Are you ready?
I'm all yours.
All right. So I tend to look at today's entrepreneurs a lot like yesterday's superheroes. Batman, Robin, Wonder Woman, etc. And I think entrepreneurs and superheroes have a ton of things in common. Chief among them, as an entrepreneur, occasionally I can envision myself flying around town, using our products and services to save our customers. And maybe even I'm wearing cape and some tights. Also, like a superhero, though, an entrepreneur has a beginning. For example, think about Spider-Man. There was a time where he was just a kid going to school, doing his thing, taking some photos, and probably trying to earn some pizza money to have a nice weekend. And one day he gets bit by this spider. And then all of a sudden he realizes, oh, I have these special abilities that I now get to choose whether to use them for good or evil. So my question to you is as follows. Before, working on Richard Branson's corporate finance team, before even your own podcast, Hooked on Startups, before even you being a helicopter pilot, before everything that we know you for today, what we want to know is, who is Matthew Sullivan?
You see what I mean about the quaking in the boots thing? I mean, these questions, they seem, simple, but they are a two-edged sword. I think the question is, are you born an entrepreneur or do you become one? I mean, and I can remember I'm not one of these guys that was an entrepreneur at the age of 7 or something. I think it was a gradual process, and it really started in my early career. So I was a stockbroker when I was 21, and much to the sort of annoyance of my my bosses, we used to broker the Far East market. So we were based in London, and our job was to be stockbrokers to Hong Kong, Singapore, Malaysia, Indonesia, Philippines, Thailand, all these amazing emerging markets. And part of that was that we would, obviously be on the phone every day to all these different countries. So, right, and I was a member of this very small firm. There was about 8 or 9 of us. It was a small team in London. But at the age of 21 or 22, I suddenly became much more interested in how could I create this technology platform? How could I reduce the cost of these phone calls? Because to phone London to Hong Kong was $2 a minute or something.
Wow.
So rather than doing my job, which was to be a stockbroker, I suddenly went off on this track, and I was thinking, well, if I could create this system where we could rent this digital pipe, and somehow, so I just became completely obsessed with doing something that was absolutely not part of my job. But thankfully, I had these very, decent bosses, and so we ended up being the first commercial customer of the Trans-Pacific Pipeline, which was this very thick sort of wire that went from London to Hong Kong. And at that point, I sort of realized, well, the thing that really interested me more than anything else was not just doing the job, but you see that there's a challenge there, and you think, well, how can I solve that problem? Which is really irritating if you're working for somebody else, because the person you're working for wants you to solve their problem.
Right.
But I'm going, no, I want to do this because I can see we could do this and this, and it would benefit your company. So I think that was the early realization that I was probably unemployable. And because you see these challenges, and rather than going, that's someone else's job, you see, well, how can I solve that? And then over time, as you mature, you realize that you've got to do things like put business plans around them, because you can't just go from one great project to another. You've actually start thinking about, does this actually make financial sense? So, but it's that. So look out for those signs, ladies and gentlemen. If you feel unemployable, it's not a terrible thing.
It took me a number of years to figure out that I was unemployable, but now that I know that, life is a little better. But you how come I can't just live in fantasy land from idea to idea? I don't want to take the time to write a business plan. That you just took the fun right out of it right there, man.
I know, I know exactly what when I remember my boss at the time, when I said I'm actually leaving to set my own company up, he said, well, what are you going to do? And I said, well, here's my idea. He said, well, where's your business plan? And I said exactly the same thing. I said, well, I don't need a business plan. I know how to do it. He said, no, look, you need a business plan. You need to write this stuff down. You need to do sums. You need to do mathematics. You need to add up stuff and see if the stuff at the bottom is less than the stuff at the top. It's not going to work. And so I said, you don't know what you're talking about. I do. I'm 22. You're 50-something. How can you possibly know? You're an old man. I'm the new challenge, so, and you can probably figure out what happened.
I don't even have to guess. I just can go down my own memory lane. But yeah, I find that interesting. Okay. So how do we go from stockbroker to, well, crowdfunding and the blockchain? There's a story there.
Well, you have to understand that several decades passed between those 2 points. So,
of course.
Really,
lots of things change, legislation changes, but there's still something there.
And again, if you think about the key thread with all of this, is for me is technology, and that's my real my real love is technology. It's the ability to create systems and processes and automate things and create the equivalent sort of digital version of a fine Swiss watch. So that's the thing that I love building. And that sort of solution can sit in a technology world, and it can also sit in a finance world, because finance is really a set of rules. It's a set of processes, and regulation is a set of processes, a set of rules, a set of requirements. And you can navigate through regulation, you can navigate through technology and finance, whether it's programmatically or using a regulatory framework. So there's commonalities in all of the projects that I've been working on. But really, the big moment was, if you go back to the late 90s and early 2000s, was that's when the internet really began to become something that was likely to catch on. And I think we all remember the early days when people didn't really understand what it was. So sort of 97, 98, people were talking about browsing the internet and surfing the internet. And those were phrases that were still foreign to many people. So back then, I set up a company where we built a company that started billing for packets of information. So we started one of the very first internet billing companies that allowed you to track internet and data traffic and actually start billing it. And that really is something very similar. That's almost the sort of foundation of what we have today and what we're building today with QuantmRE. It's the ability to create a system that tracks and traces the movement of information and data as it flows from one person to another, from one status to another status. Because as that flow of information moves, also ownership can move, and rights can move from one person to another person. So there are certain themes, whether it be in crowdfunding, where you're mobilizing capital from the crowd to a single project, or what we're doing today on the blockchain, which I'm sure we'll dive into a little bit deeper a bit later on.
Yeah, well, and it's interesting that you're drawing these parallels, because at first I didn't see them, but now that you're talking, I'm like, oh, well, that makes sense. And for those who don't remember, there was a time where you rarely, if ever, used the @ symbol, that thing right above the 2 on your keyboard. But that's the same time he's talking about, is when I began to get familiar with, like, oh, that thing, that it has a purpose. So what is it? So then let me ask this question. Do you even really like for myself? I know real estate is not something I'm like, ooh, I love real estate. I like the benefits that real estate brings, but I don't like real estate in and of itself so much. So I'm curious if you even, if you're the same way, or if you actually like, no, I like real estate, or is it just that real estate gives you the opportunity to express your genius in this particular way?
That's very kind of you. It's one of those things where it's been staring me in the face for the last God knows how many years. And I love real estate because it's real. And I don't mean that to be a pun. And if you operate in a virtual world, if you operate in technical worlds and the worlds of its synthetics and securities and finance, those are synthetic worlds. They're very real, but they're virtual worlds. And the great thing about real estate is it is very physical. It's something that we take for granted. It's something we rely on because of its physical attributes. But to be able to blend and to be able to combine the real world with the virtual world. And I'm not talking some sort of computer game environment. That's the thing that really excites me, is taking something that operates currently in a very analog, traditional, and unfortunately rather inefficient way. How do you take something that is very physical, but add this technological layer, add this layer of liquidity, fluidity, efficiency. So I love real estate really because of the challenge that it brings, because there is so much growth and opportunity in real estate as an asset class, but also because of the social implications that it has. Because for most people, their home is their biggest commitment, it's their biggest investment, it's their biggest undertaking by far. So to be able to do something that dynamically alters that to the benefit of people. So that's why I love it, not from an investment perspective, but just as an asset class, as I said, as something that's physical, but could become much more liquid than it is.
Well, and if you're willing to tackle the problem of making real estate efficient, my hat is off to you right there.
Yes.
I mean, that is more than enough, because we've all been overly frustrated with the process of how it, just how long everything inside of it takes, especially when we're trading it back and forth or trying to achieve an objective. Because that's usually the point of real estate is for those of us who are using it either as a business or our portfolio, it's to be used. It's a tool that sometimes isn't as timely as we would like it to be when it's time to take advantage of something. But yet you are introducing to the world a new way of looking even at that process when it comes to QuantmRE. Now, before we can talk about specifically what QuantmRE does, there might be room in this conversation for understanding how you see the blockchain, what it is, and more importantly, why is that even a part of the solution to what the problems that real estate faces. All right, everybody. Thanks for listening, and I'm glad that you are enjoying what you are hearing thus far. But here's one of the things that's really important. One of the most important things that you can do is get started. One of the things that I've said before, and I say again, once you get started, stay started. But more importantly, there can be lots of roadblocks to getting started. So what we're going to do is we're going to remove one of those roadblocks for you and make it a little bit easier. Because the thing that I don't want to stop you is thinking, do I need a local number? How about a long distance number? Or should it be 800? How on earth am I going to make that happen so that people can contact me as I'm out there building my business, making my cash flow grow? But most importantly, understanding that it doesn't have to be difficult. Many of you may know, but if you don't, there's a company out there by the name of Grasshopper. And what I want you to do is I want you to go over to trygrasshopper.com/cashflow diary. Grasshopper is the entrepreneur's phone system. It works like a traditional phone system, but requires no hardware to purchase, no software to install. It's just a number that flat works. So if you are out there building that distributed workforce across many different locations, it's a way for you to still go out there and make your number be unified, simple, easy to use, something we've been using for quite some time. So again, go over to trygrasshopper.com/cashflow diary. Now, let's get back to the rest of the story.
I remember the first time I heard someone talk about blockchain. It was at a crowdfunding conference about 4 years ago. Tim Draper was talking about the blockchain then, 4 years ago, and the impact that it's going to have and how important it's going to be. So, of course, everyone in the audience was busy Googling, the blockchain. And, if you Google blockchain 4 years ago, it talks about, distributed ledger. And in other words, it's a ledger that is distributed across a number of different computers. So I'm trying to figure out whether or not I'm Googling the right blockchain, because
you're like, what do you mean? Yeah.
Tim's up there getting very excited about the blockchain. And I'm looking at this thing thinking, I don't see it. And so to most people, it is exactly that. It is obscure. It's a bit like in the early days. I remember my neighbor said to me, I must be 20 years ago, he said, this thing about the internet, I don't get it. It's as dull as toast. And I was thinking, well, yeah, I mean, and that's what it reminded me of. If you look at it specifically as, the blockchain, it doesn't mean anything, but it actually means everything, because what it is a layer of truth. In very simple terms, what the blockchain does is it enables transactions to happen in a way that they cannot be changed, altered, modified, corrupted, influenced. So in other words, you don't need to trust someone as much because you can trust the technology more. Now, even on internet transactions, there has to be an element of trust because people are still worried about putting details on the internet. Or if you take an eBay transaction, for example, there's still an element of trust because eBay acts as that intermediary. You pay eBay, eBay pays the person, or you pay. I don't think it works that way, but you know what I mean. You've got that because if I agree to buy something from somebody, if I send them the money first, how do I know that they're going to send me that thing that I bought off them? So there's that element of trust, and that's why you have these intermediaries like banks and other financial institutions and all of the institutions and intermediaries in the real estate world, because things have to happen and you have to trust people so that those things will happen. You trust your attorney, you trust the escrow company, you trust the realtors. There are so many people that you have to trust that they won't run away with your money, for example. Mm-hmm. And what the blockchain does is it turns all of those trust requirements into programmatic language, which means if something happens, then something else will happen. You don't have to trust the program or trust the technology. You know that it will happen. So, for example, if I agree to buy something online, I can put my money into this sort of virtual escrow account, which is what is known as the smart contract, which is the piece that sits on a piece of electronic money. So I've got electronic money sitting there that's programmed to say you can only see or only have my money if the delivery note states that thing has actually been delivered. So imagine a scenario where I'm trying to buy something and I will pay at the point of delivery. So if the technology can prove that something was delivered electronically or otherwise, then the money is released. So I don't send you the money first and hope that you're going to send me that thing that I bought. The transaction happens at the same time. So the moment the good is received, the money is released. And you have the confidence to send that thing to me in the first place because you know the moment it's delivered, you will get paid.
Yeah.
So,
well, go ahead.
I was going to say the last piece is, but what the blockchain does is it acts as a series of records so that the blockchain records the moment that I sent you the money. The blockchain will record the moment you received that notification. It will record the moment that you triggered the dispatch of the item. It records the moment that it's picked up, the moment it's delivered, the moment I sign for it. So there is this chain of events that are recorded on a ledger, which is a series of sort of a sequential series of events, if you like. And none of those events can be changed. So if I go back and say, I never received it, you can go back and say, well, yes, you have, because this is the point that I sent it. This is when the truck picked it up. This is when it was delivered. This is when you signed for it. This is when you first started using it. So that element of trust has been removed, so I can now rely on the technology. And that's in a very simple term. If you expand that, in other words, if I want to buy a house, if I send money to you, and if all of the paperwork to do with the house can be automated, then if we think about it in very big terms, it could be very easy to change ownership of a home if all of the systems behind the scenes were automated and could also be trusted in the same way. Now, that's a very big sort of, thing to sort of, that's a rather large elephant I think I've just thrown at you to snack on.
That's exactly what I was thinking. But at the same time, on the other end of that, I'm thinking, well, if you could do that, then you increase the liquidity of real estate for sure. Because that's actually one of the challenges sometimes is you may spot an opportunity. You may have sufficient equity in a property or something that you do own, but you're just not in position to take it down. And sometimes you feel like, and I'm sure many real estate people have felt this way. They're like, man, if 6 months ago I would have been ready, I could have been ready, but I don't also want to have money sitting in cash waiting around all the time. I want to be more efficient with it. I don't want to take it out until I actually need it. So we default to other mechanisms like lines of credit, etc. But even those can still be problematic, to say the least. But what you're talking about has implications not only, for example, locally, but now I can transact real estate in another country,
And you're right, because if you look at things that work very efficiently online, if you look at the banking system, the way that you used to have to go into a bank, fill out a form if you wanted to transfer money from one account to another, you would write checks. But now you can go online and you can wire people money, you can send money electronically through Venmo and PayPal and all of these other third parties. So the efficiency, and that's just moving money, the efficiency of being able to transfer and do things with your money has changed systemically over the last decade. So taking what you were saying just now about real estate, the real friction with real estate is the time and the processes that are involved in changing ownership, registering title, the various parties, the trusted entities that have to be involved in that process. And the reason for that is because of the historical way that real estate transactions have evolved in an essentially analog world. So if you look at the participants in a real estate transaction, many of those are still paper-driven. And I know that they're
nothing but paper, man. I feel like we're still the only industry that uses paper to some degree.
And I think that's absolutely right. And that's where the real opportunity is, because, real estate globally is a $200 trillion industry. I mean, it's enormous. And, in the US alone, single family owner occupied residential real estate is a $31.8 trillion sector.
Wow.
Don't ask me why I know these numbers, but so these are trillion-dollar sectors that are still working, and we understand why. It's because of how they've grown and because of all the people that are involved. But if you look at it logically and you say, is this the optimal way that a real estate transaction?
No.
The answer is no. So therefore, it's just a matter of time before the real estate industry moves into a technological environment. But it hasn't been the right environment yet. But what the blockchain does is say, we now have a solution, because what the blockchain technology does is it allows people to trust these electronic transactions. Because if you centralize the land registries, for example, there is an opportunity potentially for records to be corrupted or
right.
for data to be changed. That's what people are afraid of. But it's almost impossible to corrupt or change data on a blockchain. So in other words, if you add that additional layer of truth to existing technologies, you then have this perfect storm of having the technological capability now to be able to deliver a solution to the real estate world.
So, well, and it's on that point that I want to understand and want everybody else to understand exactly the role that QuantmRE is looking to play in this real estate change.
So we come at it from the other end. So there are other companies that are heavily involved in taking real estate and putting those processes onto the blockchain. That's not where we're involved. We're involved at the transactional side of the business. So we know that it's going to be a few years before real estate is actually able to be transacted on the blockchain. But one of the big issues with cryptocurrencies, and cryptocurrencies is the mechanism that allows you to transfer value. And cryptocurrencies are part of the blockchain world. So a cryptocurrency is a programmatic representation of value. So in other words, if I have some computer code, that could represent value that I could transfer to somebody else by sending them data that is part of the data that I own. I can sort of tear a strip of data off, send it to somebody, and that data, when it arrives into their electronic wallet, I've effectively transferred something of value to them because they can swap that for dollars or for other things that can be bought. So a cryptocurrency is a way of exchanging value on the blockchain. But the real problem with cryptocurrencies at the moment is that they're very volatile. And if anyone's been following the progress of Bitcoin and Ethereum, you see it is the traditional sort of roller coaster ride, because it doesn't have any intrinsic value. It's not backed by something. Like the US dollar is backed by the full faith of the US government, and that's quite meaningful. Something like Bitcoin, the price depends on the number of buyers and sellers, and it can be manipulated. So what we need to be able to do to make this whole ecosystem work with blockchain and real estate and cryptocurrencies is to get people to trust and have faith in the value of cryptocurrencies, in the sense that if they hold it, they trust the fact that it will maintain its value and will not be subject to wild price swings. So if I want to be paid in cryptocurrency, I want to know that the money I have in my cryptocurrency account next month is going to be the same as what it is this month. In other words, it's not going to collapse and be worth half as much. So that problem is the problem that we're solving. So we're creating a cryptocurrency that is backed by real estate assets. So in the same way that the US dollar used to be backed by gold, we're creating a cryptocurrency that is backed by real estate. And the real estate asset class that we've chosen is what you were saying earlier, which is this the equity interest in people's homes. So what we do is we buy a percentage of the equity that you own in your home, and we pay you in US dollars, but we then take that asset, and that asset becomes part of a whole pool of assets that we then use as the foundation asset to enable us to issue this cryptocurrency, and say each one of our cryptocurrency units is worth a percentage of all of these real estate assets that we have in our pool.
Interesting. So let's run a couple of cases. Let's go from me, the homeowner. If I'm the homeowner, I'm doing this, and I would be willing to do this because you become part owner in the house going forward, but I get cash today. Well,
the good thing is we don't own anything. We don't own your house. There's no transfer of ownership.
Okay.
The way the contract works is we share in the potential appreciation of your home. And it's almost like an option. And that option is exercised when you sell your home. So we're not tenants in common with you. What you're doing is you're promising that in exchange for us advancing you some money now, when you sell your home, you'll give us that money back. But in addition to that, we will share, if your house goes up in value, we'll have a share in that as well. And similarly, if it goes down in value, we run the risk of not making any money on our investment. But the interesting thing is it's not debt. So there's no interest. So we get our capital sum back, but we only make money if your house goes up in value. So there's no fixed interest rate. There's no monthly payments. So you're effectively selling or forward selling some of the value of your house based on what we think the value is going to be in the future.
Got it. So in this particular case, I'm just going to throw this one out there, that you're buying a call option on the value of my home. That's what I'm hearing. Now, with that being the case, do you guys work with the value add players? Like, because I'm sure there's a number of individuals who are remodeling homes for the very specific purpose of increasing their value and selling them, in the not too distant future.
I think the issue with a lot of HELOCs and second position mortgages is that the lenders dictate how you have to spend the money. So they will say, okay, we'll lend you some money based on the equity of your home, but you have to spend it on remodeling. So let me answer your question in two ways. The first way is there are no restrictions on what you spend your money on, because effectively we're not lending you money. We are buying a percentage of the value of your home. And that's your asset. So you've effectively sold that to us. So the money that you get is yours to spend as you wish. The second part of the answer is to say that if you are in the business of remodeling, we are potentially another source of capital, because you may have reached the amount of money that you can borrow based on your current asset base. But you still may have some free equity. So that free equity is of interest to us. So we could be an alternative source of capital for people that own rental units or own houses that are not occupied by themselves, where they've got equity, but they simply cannot release that because they've reached the limit of their borrowings with their particular bank.
Got it. Now, because I like that, but I also like the other side of this coin, because I like the idea of the whole cryptocurrency world. Talk to us about those who would be interested in playing on that side of the table.
Well, we sit at the intersection of the real estate world and the cryptocurrency world. So most people who have heard of cryptocurrencies, many of those are not really willing to jump in because they don't understand what the major cryptocurrencies are based on. And we talked about this earlier. So if we're able to prove that our cryptocurrency is based on real estate assets, then they're probably more likely to dip their toe in the water and get involved and buy these cryptocurrencies, because effectively they are an investment. They are a security. They are listed under the rules and regulations that affect securities. So there's a lot more protection there than a traditional sort of non-security cryptocurrency. So the first thing that we do is we enable people to get involved in cryptocurrencies that are backed by assets. And those people could be individuals with a few $100s, or they could be family offices or institutions who have several $1 million, who want to get involved in this new economy, but frankly don't have the appetite for the volatility that traditional cryptocurrencies have. The other part of the platform that we're building, though, enables people to trade. So as we bring our real estate assets into our blockchain, we can then chop those assets up into tiny little pieces, and we can say to people who want to be real estate investors, here's an opportunity for you to buy fractions of these specific properties, put them into your own portfolio, knowing that each transaction is recorded on a blockchain. So the other thing that we do is we're creating this dynamic trading platform for real estate assets, where we're taking that one step closer to creating a liquid environment for houses or fractions of houses to be bought and sold in an instant, rather than waiting for the traditional paperwork.
You couldn't even figure out how long to save because it takes forever. That's really
it could be less
funny.
Than that.
He's like, it's not an instant, but it's not quite forever, but it feels like it. Yeah, that's the alternative. So when it comes down to it, though, how did you even think of this? I mean, just like, where does that come from? I'm like, that's amazing.
Thank you. It's an iterative process. So what happens is you start by looking at what is the problem that we're trying to solve. So this is something that I learned, over the years. I mean, having great ideas is a really good thing, but they don't work unless you're actually solving a problem. So if you can have an idea that actually solves a problem, that's the sort of thing that you want to focus on, because that has a real world application. And guess what? That actually becomes a business. So if the problem is big enough and your solution is fit for purpose, then potentially you have a big business. And that's really how the big businesses have grown. It's because they solve problems. They solve people's pain in a way that enables them to, provide products or solutions that have a price. So the first problem that we thought of, we didn't understand why the value of Bitcoin was going through the roof, because we couldn't figure out what it was based on. And we understood the dynamics of the network effect and, buyers and sellers, and, if you've got more buyers than sellers, the price goes up. But again, if you want to, the thing we struggled with was, this is not fit for purpose, because you cannot use this currency if you cannot predict whether it will be worth anything at the end of the week. So that's where it began. So, and then one thing leads to another, and you say, well, now we've got this. What about this? Would this work? Are we solving another problem there? So, the reason we chose this asset class is because we needed an asset class that's very scalable. We needed to create this sort of machine where we could just, suck in real estate assets and put them into our structure to use them to back the real estate. But we needed to be able to create a large volume, because if we have a lot of demand coming in, we need to be able to satisfy that demand very quickly. And commercial transactions, each commercial deal is different. Each fix and flip is different. But this asset class, which is equity in single family homes, is something that is very large and very scalable. So a very long question, very long answer to a very short question. But it's one thing leads to another. So it wasn't this aha moment where the whole thing was suddenly mapped out. I wish that were the case.
It came to me. No,
yeah.
Totally understood. So for those that have listened this far and are probably interested in finding out more, how are they going to track you down? What do you want them to do?
We have a website. Drum roll. So if you go to Quantum, which is QuantmRE.com, you'll see a site there which we will be. It's a temporary site at the moment, but we will be rolling out the platform during September. So just there's all sorts of ways of getting in touch, and I'm on the sort of usual social channels, but QuantmRE.com is the best place.
Excellent. And as we wind down here, I've got a final question for you, because I'm curious to hear your answer. There's a number of individuals who are listening who have reached what I like to call the precipice of decision, where they've listened, they've gotten excited, they're like, man, I'm gonna be in business now. I'm going to do something. I mean, if Jay can do it and everybody else can do it, and I can stay up late one night and begin to my own iterative process like Matthew did. I'm gonna make my business happen. But like I know that when we reach these decision points, that oftentimes what happens is that we have a companion in the form of a voice, and that voice simply says things like, what are you thinking? That doesn't make any sense. And why blockchain? What? You just need to go back, and for some people, they are actually related to that voice. So my question to you is as follows. Let's pretend they're actually going to follow through this time, Matthew.
Yes.
And they're going to do so in the next 24 to 48 hours. They're going to do what you say. What would you suggest that they do?
For a start, fear, in my view, is a temporary lack of information. And the thing that stops most people doing things is fear. But the thing that sort of solves the problem is to actually do things. So I think if I were to sort of answer the question in a slightly different way. And the thing that I think has helped me most over the years is to go and do things, is to actually get started. And you need a certain amount of naivety, because if you knew everything about the business, then you wouldn't start in some cases, but then you wouldn't learn and you wouldn't get the experience and you wouldn't build up that resilience and that knowledge. So I think if I can answer the question in a very generalist way and say the thing that stops most people from and real estate investment is the same thing. If you want to be a good real estate investor, you have to treat it like you have to be entrepreneurial. We have to treat it like it's a project. It's it requires work and experience and knowledge and all of the same attributes as a successful business leader. But as someone once said to me, get the shovel dirty. Start somewhere, because the moment you start, then you start moving forwards, and as you start moving forwards, you begin to learn more, and then you have all the failures and which is the opportunity to start again. So my other way of answering the question is if you're starting a business, treat the business as a project. Don't treat it as your business. Until it becomes successful, it's just a project. And that means that you're not going to be worried if it goes wrong or fails, because it's just a project that didn't have the outcome that you wanted, so you go back and start again. So
I like that because it removes some of the self-imposed pressure we can put on things at times, and that can give you the freedom to actually operate or be creative as needed to be in order to make it work. So I like that a lot. I like that. I definitely appreciate you, going out there, making business happen, but more importantly, being willing to tackle the blockchain and understand it and break it down so that we can use it too. And I appreciate you taking the time to share your knowledge, your wisdom, and insight here with us today at the Cashflow Diary.
Jay, it's been an absolute pleasure. Thank you for having me on.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean? That means it's time to dig in. It's time to understand this blockchain thing. It's time to go out there and figure it out. Why? Because at the end of the day, technology is pushing forward. It is going to create the change. The change is already here, and you might as well learn to surf and ride this wave. Ladies and gentlemen, it's been fun talking to you today. I look forward to talking to you soon. Until next time.